What's going on, traders? Hope you all had a great weekend and a good Monday, starting off FOMC week here, and of course, big earnings tomorrow from Google and Microsoft. But it is Monday, July 24th, and we will be doing an analysis of the S&P 500 Spider ETF. Markets were higher today, up about $2, 0.45%. Final print coming in at 454.20. And before we get into our analysis, this video is for entertainment and educational purposes only, and in no way should be construed as financial advice. So as we're looking at the daily chart, of course, we're starting off with the macro. You can see here we really couldn't show any follow through from the bulls as we did try to break higher and sold off a little bit towards the end of the day. But this is to be expected as we went over coming into FOMC. So not really too much to go over on the daily chart here. We still see some weakness starting to peel in on the Momo, so we will keep an eye on that. The only thing really wanted to mention from our macro trends that we have been watching, you can see, and let me actually just go into the 4-hour, really how nicely we were watching this big major key pivot for the bulls to hold here, and really nice confluence on the this trend line here as well. And we didn't quite get there, but pretty nice barrier of support there for the bulls. And after that sell-off on Friday, we just really consolidated, held that level, and we had that nice push into the morning session before, like I said, coming down a little bit at the close. So again, you can see really how important those macro levels are, and being able to gauge what is going on in the market's big picture. So we will go over here now a little bit more in what we can look for into tomorrow. But with that being said, really, not too much has changed. So we'll make it quick and kind of just go over what we saw here today. So I did mention this 452 level. Wasn't quite as interested in it as it had been tested many times, but it did hold up once again. You can see the swing high here and holding up as we just came up, as I was saying earlier, came back down. We really still held the 20 and the 9 here on the 30-minute chart, and I'm sure if we go on to the hourly, even more of a nice hold. And the other thing is when we did start to dip down here right before the open, we talk about this as well in our videos. You can see that, I'm trying to zoom in here. Come on. You can see that we actually did hold, right? I talk about this, the 50% retracement of this candle. So we never got below. If we started taking out this candle, then maybe our, your viewpoint or thesis for the day could have been potentially a bit different. But holding this final 50% retracement within this candle really set us up for a nice push right in the open as we got back over and reclaimed the bottom quadrant of our balance zone here, pushed up. And then where did we come into? Once again, that pesky half gap, that 455, 454.83 area, touched again, was not able to follow through, and that's, you saw the fake break above, and then the sell down back into the bottom part of the range. And right now we are just consolidating pretty much right at point of control here in the evening hours. So it will be interesting to see what happens. We could see even more hesitation and consolidation in the markets tomorrow. So let's see if we just have a repeat of tomorrow, in that we just kind of travel here between this area, this bottom quadrant of our balance, or this bottom half of our balance. But the one thing I will mention is there is a slight very slight chance that we could see an exit liquidity run tomorrow. Sometimes they do like to run the markets ahead of big data, and we push up, and then the data hits, and they dump it down. So institutions kind of front run the market, trying to exit their positions ahead of the big announcement by the Fed. So that is also a possibility that we want to keep in the back of our minds. But of course, it is a slim chance. But I'll throw it out there as a possibility. It definitely could happen. But really, I think to see much of a move, we're going to have to break the range. But it is possible we finally do get over that 455 and confirm and start to come back up and test this upper part of the range. I mean, from 455, that's only about $1. I mean, maybe we have a fake break and kind of come up to 457. But yeah, I doubt that will happen. But who knows? But either way, we'll just take it level to level. Really, the plan hasn't changed that much, right? We're holding this part of the quadrant. Okay, we'll still potentially look for those longs. If you want that extra confirmation, got to get over 455, in which case then we'll be looking for these upper areas. But if not, then we'll be looking for a true break of this range. And really, could be able to get the short back down to these, Monday's pre-market lows. That is a possibility, but that really needs to get taken out, as well as the 451.35 area, and really 451 for the real chance of the selling to come in and see us come down into these areas. So we'll keep it quick, simple, and tight today. Not really too much to go over. Of course, Microsoft and Google will be reporting tomorrow, so we'll keep an eye on that, as they certainly can move the market. But really, FOMC is our big day, and we'll go over how we look at trading that in tomorrow's video. So if you're enjoying the plans and content that we are putting out, don't forget to like and subscribe. Really would mean a lot to me and helps out the channel immensely. Other than that, let me know maybe what you guys think is going to happen into FOMC. Are we going to, is Powell going to come in dovish and we rally higher, or are he's going to take a bit of a more hawkish stance and we go ahead and sell off? The only thing I will mention, though, I am still holding my swing short. It is currently in the negative, and let me just take a quick look. It closed down about 26%. I probably, will offload some of that position tomorrow just to be safe. I'll have to see really what the market is doing, but it is a little bit too gambly for me to be holding much size into a major market event. I just wanted to mention that as well. So we'll see, what I end up doing tomorrow. But there is a chance I'll definitely take some off the table, just because it is very high risk coming into FOMC. So, I hope everybody has a great day tomorrow. Let's be prepared. Kind of more of a scalp mindset, in, out, not really interacting with the market much. Following our plans, our rules, keeping defensive sizing, and then we'll see what we get later in the week. Okay, everyone, take care and have a good night.